Good afternoon, everyone. Brett Wisnowski, Security National Mortgage Company, coming from you very casually from my home here in Austin, Texas. It's going to be a very cold and record-breaking day as we go into basically what is being called a blizzard in Austin, Texas, which of course is unheard of. But anyway, I decided I'm going to dress down and stay in today. I hope you are as well. Stay off the roads. They're very icy. And the blizzard, or I guess they're actually technically calling it a blizzard now, is just hours away. So we're just going to stay in today, and I'm making this video and spending a little time with my family. So I hope you're doing the same. I just wanted to talk a little bit about the Austin housing market, speaking of record-breaking events in Austin, Texas. As many of you may know, and if you're my client, you're watching this, you're likely someone that's pre-approved, that's been shopping, and just has not had the opportunity to get under contract for a home, as that is becoming more and more difficult to do in the Austin market. So I wanted to talk a little bit about the trends and what those trends may mean for us in the coming future, and what that means to you in terms of acquiring a home, especially those of you that are my first-time home buyers that don't already have a home, or they're relocating here. Maybe in both of those situations, I definitely want to give you a little bit of reassurance and a little bit of direction in where we think the housing market is going moving forward. So January statistics have been released, and looking at the numbers, the median sales price, or median listing price, I should say, not sales price. This is just listing price, because we all know that, of course, the listing price is honestly almost pointless at this point, because the offers above listing are just phenomenal. But anyway, so the median listing price is creeping up to about the $460,000 mark. Median listing price in Austin, Texas. If you're looking at the United States as a whole, it's actually just above the 340, maybe closer to $350,000 mark. So we're well ahead of the average of the United States here in Austin, Texas. And some analysts are actually calling Austin's market the hottest in the United States right now in terms of demand. So that is obviously a great thing for those of us that own homes are here, that are moving here, that are being relocated by our employers. But it's not so great if we're in the market for a house, and we're obviously in multiple offer situations, and the inventory is also at well beyond a 3-year low, according to our charts. So we're actually just above about 1,500 listings for the month of January. In the Austin Round Rock area. That is nothing. That flies right off the shelf, as all of my real estate agents and my clients may know at this point. So today we're going to talk a little bit about that. I'll show you a little bit of graphical evidence, so that way you can kind of tie these concepts together in your head, so you can see these things a little bit, I guess, in a little bit more of a technical standpoint. And then we're also going to talk about interest rates, because there is definitely some news in interest rates. So for those of you that have not refinanced yet, I would say if you haven't financed your home since probably mid to late 2019, it's time to look at this, because you're going to miss the opportunity if you do not act quickly. And that's not a sales gimmick. That's not a get you off the fence kind of thing. That is the actual truth. The interest rates are creeping back up. If you look at the 10-year yield, and then also the mortgage-backed securities market, they're both trending in opposite directions, with mortgage-backs trending downward, 10-year yields trending upward, which does technically indicate that the rates are on the rise. And we may not see as much of that at the micro level, so at the firm level yet, but the macro level is certainly showing that sign. So we'll go over that at the end of this video as well. Representation of this data, I wanted to pull the latest information from FRED, so that's the Federal Reserve's economic database. I pulled that this morning, so these are the freshest and most accurate statistics available. So this is actually going all the way through January, and we're now mid-February, so this is pretty up to date. So I wanted to pull United States as a whole, and then the Austin Round Rock area. And of course, this won't be spot on, and I'm also going to be pulling some data from ABOR, and I'll be sending that out with the video likely as well if I get to that today, just because that's something I've been keeping track of as well. But anyway, just want to show you. So housing inventory represented by the blue line, and then inventory is represented by the red line, and then the median listing price is represented by the blue. So in the United States, as you can see, dating back probably, I would probably say this is 2016 or July of 16, you're seeing a little bit of a downward trend in the actual inventory and a little bit of an uptrend in the price. That's been happening for a while. That's really nothing new. But since COVID-19 hit, and this is represented by this little yellow background, and that actually represents a recession on Fred, which the end date has now not been determined as of yet. So it really depends on our GDP, so on and so forth, when Fred will actually determine the end of this recession date, just because we may not be out of the woods yet, as you all may know. But as you see here, since COVID-19 pandemic has hit, the interest rates went down, which are not represented here. You're seeing a sharp decrease in inventory, a sharp increase in price. The sharp decrease in inventory is likely just because people are not wanting to move because of the increases in price. So that's very that's very in line with what we're seeing here in Austin. If you look down here, so it's kind of the same thing. Kind of a slight downward trend in terms of inventory. And then also price-wise, we've all, as you all know, we've definitely been on quite a roller coaster in price. We had some higher points here back in 2016 and going into 17, and it's just been kind of up and down. Which it's held pretty steady if you watch the prices themselves, not necessarily going by this graph and the median price, but if you watch the listing prices, our housing market has stayed pretty steady. So, but now you're seeing this just super sharp increase in listing price and median listing price, all the way up to $460,000 median list price for January. Meanwhile, our inventory is just above 1,500. So we're really starting to see that super sharp inverse relationship that's not only demand driven, but also interest rate driven. So that's a big deal. Here in the United States, the price curve is actually kind of topped out around the 350 mark. And actually is starting to show signs of maybe trending back downward or maybe just leveling out. Historically speaking, the interest rates have had a direct impact on the price, except for between 2003 and 2008, and I think we all know what happened there. But it's, relatively speaking, it lowered interest rates the higher the price, just because of the overall affordability and the willingness to spend money in the economy and all the psychology parts that go along with economics. So I just wanted to show you all this so you have this visual representation. So what this means for us and what this means for you buyers out there that are on this list that are getting my videos. This means we're still kind of in for a ride. And in fact, according to this, it's actually getting a little bit worse in terms of actually having inventory. I know a lot of your real estate professionals that I partner with have probably looked into maybe some builder options for you. Or have looked into maybe other alternatives depending on what price point you're looking for, what type of home you're looking for. If you're a investor, which I work with several of you, you know that it's very, very hard to get a builder to sell an investment property right now. So you're definitely subject to the open market, and then obviously, as you know, you're likely going over listing, and you're possibly bringing money out of pocket to close, depending on what the appraised value comes in at. Now, the good news is, the housing prices are increasing so sharply that if you do have a short appraisal, I do have some methods to mitigate that, and I'll share those with you that specifically applies to. I'll stay away from that in this, but I have just, of course, wanted to talk about the price to inventory. So the great news about Austin is that I believe that when this curve starts to flatten out as it does in the United States as total, or as it has been doing in the United States total, I should say. As this begins to flatten out, I do believe that we're going to see steady demand from those that are relocating to Austin, and our housing prices will hold steady, but they will certainly be higher than what they were before. So I think that as this basically corrects, so in terms of inventory, this will also basically correct, but more so what it really is about is the amount of buyers in the market. So we're going to talk about that next. Per the suggestion of one of my favorite real estate partners, and you know who you are, I'm going to go ahead and just break it down very simplistically for you. So the Austin market is heavily dependent on supply, demand, interest rates right now. But there's also a fourth factor, and that is fear of missing out. We have a very scarce product or a scarce asset here that a lot of people want, and that's obviously driving the demand up, that's driving the price up. The scarcity principle in economics says that if you have a growing demand and a shrinking supply, you see the equilibrium price rise. That's exactly what's going on. And I actually think that this is a long-term sustainable rise in price. I do think that the demand overall in Austin will likely smooth out, kind of soften a little, but that's actually necessary. The fear of missing out and the crowd mentality, as I was mentioning before, will diminish for those who are, just maybe softly considering moving here, maybe softly considering a second home here, maybe softly considering an investment property here. But for those of you that myself or my real estate partners work with, we're going to fight for you, and we're going to continue to be persistent for you as long as you're persistent with us as well, and we will get you a home. And I believe you will enter the market at a very good time. You're going to enter the market at a good time of upside, and that's going to be some long-term value growth for you. And any of you that already own, you've likely already seen quite a bit of increase in value, even if you've only owned for a few months. So congratulations to you. But anyhow, I just wanted to break that down for us. Next, we're going to talk about interest rates. This is very important, so I certainly suggest everyone listen up. Videos will recognize this. This is the mortgage-backed securities pricing chart on mbshighway.com. As you can see, so basically the last few months we've been on a pretty steady little uptrend in price, which means interest rates have been relatively low and stayed pretty stable. Now we're starting to see a downtrend here, so the sellers are kind of taking over, and as you can see, there's been several lock notices that went out from MBS Highway. I sometimes agree, sometimes do not. But if you go back pre-pandemic levels, and this is actually where the uptrend started, which was in December, really, of this past year. But as you can see, we hit a peak, and now we're on our way back down. So that tells me that the overall trend for interest rates will be going up. 10-year yields, so the U.S. Treasuries, they're going up in price. It means the yields are going up. So anytime that you see that, then you can also basically you can count on interest rates going up at this point. So it's above all 3 or 4 moving averages we have here, 200 all the way up 200 days. We're above 200 days moving average, and we are above the most recent moving average was 25 days, and that definitely indicates an upward trend. So I do think that this is here to stay for quite a while, unless something significant economic happens. And I do believe that the overall market sentiment is saying that the majority of the COVID-19 pandemic has been seen in the markets. We're in a state of recovery, and that's why you're seeing this. Also, more government spending due to the new administration is expected. Therefore, that's being priced in. Interest rates typically go up in those cases. So what this means is that we have a limited scope in terms of how low they have been. Now, the bank rate will stay near zero through 2023, according to the federal government, or the Federal Reserve, I should say. So we do have relatively low rates for quite some time, but this is ticking back up, and honestly, this will probably cool down the housing market in the United States and in Austin. So what this means for my clients and my real estate partners is that it's time to refinance, it's time to purchase a home, it's time to get in place those permanent forms of financing you're looking for, even auto loans, anything that you have that is a long-term interest rate or a fixed interest rate. It's time to lock those in, because interest rates are coming up, and they will continue to go up as the months come on, or months pass, I should say. But anyway, so if you have any questions about that, call me. If you're looking at refinancing, call me. It's definitely time. Let's look at it together. Let's see what we can do for you. If you're one of my clients and you're under contract to purchase, which there are several of you, even though, of course, Austin is pretty hard to get a contract in right now. I will be watching the markets, and I'll be waiting for an advantageous day of maybe a little bit of a shift in sentiment. And that'd be a good time to lock for us. So I'll certainly make sure you're taken care of if you're not locked yet. We're definitely still in a good position, but that is deteriorating as we speak. So let's be conscious about that. Let's be careful, and let's advise our clients properly. So if anyone has any questions, please go ahead and contact me at the number below or the email address below. I'll be happy to answer those. But otherwise, I hope everyone stays safe through the blizzard apocalypse of 2021 here in Austin, and I'll see you next week.